Hi, this is Kirubakaran Rajendran. Welcome to Trading with Groww channel. In this video, we're going to talk about a intraday trading strategy using moving average. See, generally, a normal moving average will consist of a lot of noises, a lot of whipsaws, so it is very difficult to trade with a normal moving average. So, we have come up with a different criteria of moving averages here. Let's consider an example called relay race. See, a normal running race is where a single person who runs from particular place A to place B, and the moment as fast as he reaches that destination, he considered to be the winner. But consider a relay race where it consisted of three different runners, where a guy have to run fast and pass on the stick to the other person, and that guy has to run fast, and then again no, he has to give that specific stick to the last person, and the last person have to run and complete the race. So this relay race consisted of three different runners. Consider the first runner who has to be the fastest runner, because no, he has to take that lead and run fast and pass that stick to the second runner. So with respect to the first runner, it has to be very fast so that he can overspeed the other runners and pass on that stick to the second runner. And the second runner who is a steady runner, which means that he has to maintain the same speed where the first runner has given, and then he has to pass on that stick to the third runner. And the third runner is called as the endurance runner, where he has to pick the speed again and matches with the first two runners, and then you have to complete the whole race. So instead of a single racer or single race which is focused only on single racer, here three different racers focused, and only based on the performance of all three different races, the race can be considered as complete, and the person wins or not is totally dependent on all three runners. Likewise, when you simply trade on a normal moving averages, it can win sometimes, it cannot win sometimes, because a lot of false signals could come. But when you trade based on moving averages, based on three different moving average crossovers, which will have the fast moving average, which will have the medium moving average, and which will have the slow moving average, when all three passes the condition, then it filters out a lot of noise, and that can help you to capture the right trade. So in today's video, we're going to focus on this specific moving average crossover strategy, which is primarily focused on three different specific moving average crossovers. So I'll explain the rules of the strategy with an example so that you will be easily able to understand it. Let's consider this example first. See, with respect to intraday, the overall duration could be between 9:15 to 3:15. So no, even though the market is open till 9:15 to 3:30, the intraday positions cannot be kept open till the market closing. So 9:15 to 3:15 is the ideal time. So if you consider what is the overall trading hours, it is approximately around 6 hours. So 9:15 to 3:15 is 6 hours. So if we consider that 6 hours 2 minutes, it is 360 minutes. So overall from 9:15 to 3:15 we have 360 minutes. So let us consider how many 5 minutes we have in this 360. So if you just divide this by 5, 360 by 5, you are going to get 72 5 minutes. So if I am going to plot a 5 minutes chart in a candlestick pattern, then it is going to give me 72 bars. So each bar is considered to be 5 minutes bar. So now we are going to create three different moving averages. So the first one will have the fast moving average, and the second one is a medium moving average, and the last one is a slow moving average. So the fast one will consider the 10 bars, which is 10 into 5 minutes, so which is 50 minutes, and the next one is 20 into 5 minutes, so that is 100 minutes, which is medium, and the last one is 42, which is into 5, so that is 210. So if you add all this, you are going to get 360. So if you, which is 360 minutes. If you add all this 5 minutes chart, you are going to get 72 5 minutes chart. So this is how we have created a three different moving average strategy. So instead of simply relying on, okay, we'll go with 10 moving average, 50 moving average, 100 moving average, we are segregating the overall hours, which is 6 hours intraday time frame, into multiple segments, and then trying to finalize what is the three different moving averages: fast moving average, medium, and slow, by using these minutes chart, so that you will clearly know we are focusing only for the current day and how fast the overall market moves. Based on that, we are segregating into three different time frames of moving averages, which is 10 moving average, 20 moving average, and 42 moving average. So we are going to apply these three moving averages into the charts so that we would be able to grab a trending move. So let me show you that with an example. So now let me open, now I have opened an IRFC chart, and let me apply this indicator, moving average indicator. So you type moving average, then you will get moving average triple. So you just click on that, then that is going to apply the moving average onto the chart. So now we are going to change, see, by default this is the moving average you get, which is 14, 21, 35. So that we are going to change it. So you just click on the settings, or you can right click and click on settings here, and in the inputs you change it as per what we have created, which is 10, 20 and 42. So 10 is the first period, 20 is the second period, and third one is the 42. So this way we are focusing on fast, slow and medium, all three. So either you can apply for exponential moving average or simple moving average. So you can go for exponential moving average and click on OK. That's all. So now you can see whenever no market has given this kind of breakouts where the red line is the fast moving average, when it crosses above the medium and slow moving average, which means that market starts trending. So we are going to enter into the trade exactly when this condition is satisfied, which means that whenever a crossover, this triple moving average crossover happens, we are going to buy that specific stock. So exactly now, for an example, IRFC stock opened up a slight gap up, and this three moving averages crossover happened where the fast moving averages closed above the medium and slow moving average, and then we'll enter it here and we'll try to, so if since it is going to be an intraday time frame, we'll just exit now and exit either at 315, so this place, so either we will close the positions here, or you can do is you can trail the stop loss. So when this red line closes below this blue line, which is nothing but when the 10 moving average goes below 20 moving average, we are just going to exit it. But when the 10 moving average close below 20 and then 42, which means that the trend is changed from bullish to bearish, and then we can just go from long to go to short. So this is how you can take positions with respect to moving average crossover using three different moving averages. So let's see another example, which is Infosys. So Infosys, as you could see, yesterday on 14th, the same thing happened where the moving average crossover happened here. So actually the moving average crossover happened yesterday itself. Since now we are going to apply it for intraday, we'll be considering entering at the day open. When market opens around 9:15, we'll be entering into this trade. So always give preference to the stocks which opens with a gap up and then it continues with that specific trend, because when the market opens with a gap up, that gives you a stronger conviction, because more volumes will come into play and more people will have conviction in that trade. So same thing happens, because along with this moving average crossover, you were able to see a significant volume. See, this is the overall volumes on this bar alone, where there is a significant rise in volumes. So a rise in volume along with the price confirmation of gap up and along with uptrend gives you a stronger conviction on that trade. So that is what exactly happened, where the three moving average crossover happened, where the 10, 20 and 42. So all these three moving average crossover, as you could see, the red line is above the blue line and green line. So that condition is satisfied and the gap condition is satisfied. So we'll just go and buy at the day open around 9:15 itself, or you can just wait for 5 minutes for this candle to close and you can just enter at 9:20 and try to completely hold the trade until this red line goes below the blue line. So for the entire day, the red line did not go below the blue line, which means that the trend is intact. So when the trend is so strong like this, you can see a continuation of the trend also. That is the same thing happened where the next day also Infosys gapped up, and the same thing happened where there is a huge increase in the volumes at the morning open itself. So that again shows a double confirmation where this particular trend is going to continue for a while. So people who wanted to enter again can enter again at 9:20 once the first candle is closed, and they can continue to hold the position until this red line close below the blue line, which is nothing but the 10 moving average goes below 20, then which means that the trend is getting slowed down, so we can exit. But when this blue line and when this red line goes below blue line and then again goes below this another blue line, which means that the 10 moving average is going below 20 and then 42 as well. So as per our earlier analysis, when the fast moving average closed below the medium and then slow moving average also, then which means that the trend has changed from bullish to bearish, so we can go short. Otherwise, you can just continue to hold the trade as long as it trades on the uptrend, and if in case it goes, this red line goes below the blue line, we can simply exit it considering the trailing stop loss is hit. So at the start of the trend, like for an example, once you take the trade, what should be the initial stop loss? See, once this green bar is closed, you are going to enter, right? So you can use that green bar slow as your stop loss. So let me plot that. So this can be your initial stop loss, which is 1462. So you are entering around 1475. So you are keeping 1462, approximately around 10 to 12 points of overall loss, stop loss, and then you are trying to ride the trend. So we have bought almost at 1476, and we would have exited here at 515 around 1500 rupees. So this way your initial stop loss is very minimal and overall risk to reward ratio is also much higher. So you don't need to keep any kind of 1:2 fixed target. You can just use the trailing stop loss as this moving average. Only when the red line goes below the blue line, you can exit the trade. Otherwise, you can just continue and ride the trend. Let's consider another example on the downside. Now you could see this is now Max Financial Services, where at this point, yesterday at this point, the stock closed on the downtrend, which means that this specific candle closed below the moving average, and also the red line has gone below the blue line, all the both medium moving average and slow moving average, which means that the trend has turned bearish. So we will just shorten at this close of this candle, which is approximately around 1048 rupees. We would have closed, we would have shorted it. So let me plot that area here. So we would have shorted at this level. So 1048 is where we have shorted, and from there market started going down, going down, going down, and eventually the blue line and the red line crossover happens, which means that the 10 moving average closed above the 20 moving average. So we can we can exit the trade exactly at this level when the trailing stop loss is hit. So I'll repeat the rules again. We were waiting for the moving average crossover to happen on the downside, where the red line closes below both the moving averages and the candle also closed below the moving average. So we have gone short here, and once we have gone short, we are waiting for the trailing stop loss to get hit, where when the red line goes above the blue line, we are just exiting the trade considering the trailing stop loss is getting hit. So we shorted here at 1409 and we would have exited at 1030, making a good profit of around 15 rupees. And again we are waiting for the crossover to happen, and once the crossover happens, either you can enter it again or you can just wait for the next day candle to close. So again, for an example, next day the same thing happened where the crossover is still valid, and once this specific candle is closed, we can we can enter the trade again at 920 once this candle is closed, and we can keep this candle's high as a stop loss, and we would have ride the trend and it would have ended up in a very good profit. So currently we would have shorted at 998 and now it is trading around 975. So we are in a good profit of around 25 rupees. So this is how you can trade this moving average on the short side. And the next question most of the people will have is, can I trade the specific strategy with respect to any kind of options or any kind of indices? See, with respect to any indices like Bank Nifty, Nifty, Fin Nifty, these indices doesn't trend every single day. So there will be couple of days where it can trend, but most of the days it will be like this, where it can move up and move down on a zigzag basis. But with respect to stocks, one stock or the other stock, one sector or the other sector might always be in trending, might always open in gaps. So all you have to focus on is look for the stocks which is opened in a gap up, or you can just go to Groww and then you can just scroll down and you would be able to see what are the top gainers and top losers. Then you can apply the rules on these top gainers and top losers, so that you would be easily able to identify the trending stocks and easily able to identify the correct time to enter using the moving average strategy. But when you apply that with respect to these kind of indices, it would be very difficult to trade. Even with respect to FNO, let me open any kind of FNO call options or put options and then try to open the chart. See, this is the call option strike. As you could see, the option prices are prone to wild moves, so you wouldn't be able to gauge the trend clearly when you're trading this kind of strategy with respect to options, futures, or index. So that is why it is better to apply this strategy only on stocks specific, so that you would be able to ride the overall trend and you would be able to easily shortlist the list of stocks that are clearly trending and apply the rules with respect to moving average strategy and capture the trend. So the more trading opportunities comes with respect to stocks, and very less opportunity comes with respect to indices. And if you apply that with respect to options, it would be really difficult to trade the strategy. So avoid it with respect to options, but you can apply that with respect to intraday in stock. So this is what I wanted to convey in this video. I hope you found the strategy really helpful. In case if you guys have with respect to any doubts in the strategy, please post it in the comment section. I'll address it. I'll see you guys next week with another different topic. Bye.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.